All right, folks. AM freaking C. What do we have for today? Well, obviously, rough day. We were down 8.41%. That equates to roughly $1.73. And I know you're probably sitting here wondering, Dave, when the hell does all of this end? Where's our bottom? Where are we going to find support? Because it feels like it's never ending. I mean, just a couple weeks ago, we were at $27. Now we're down to $17. Not going to lie, it absolutely sucks. But we have some great things that we're going to be breaking down for you folks today. Remember, it's all about staying calm, folks, because like I said, pretty much the past couple of weeks, it's going to get uglier before it gets better. And that's what we're seeing right here. We've talked about Wyckoff. We've talked about the options. But, guys, don't worry. It's going to be over and things are going to be good. So, first of all, let's talk about the 1 hour chart. Today, it was bloody. I mean, gap down in the morning and pretty much just traded down the entire day until just about middle of the afternoon. We start to get some reversal from that area of like $17.91. You can see here just about a double bottom on this 1 hour chart. But still, guys, not the greatest double bottom I would have liked to hope for. Buying pressure at this level was pretty low. We had 7 million and 6, or just about 7 million, and we can call this one 7 million as well. That's all right, but it's really not the volume spike I'm looking for. Now, I know you guys are going to say, well, it looks like the MACD is crossing over. RSI is being beat up. Absolutely it is. But what we've been talking about and what we've been waiting for is that volume spike. What we want to see is we want to see like what we saw over here, and I'll show you exactly. This date here, 5/13/2021, really the start of the June 2nd run-up. We saw 294 million shares traded on that given day. Now we're still low. We're picking up a little bit. We're still at 55, around that area, and for the past 2 days, or at least past 2 trading days, we have been in that range. So we want to see that volume spike pick up, and that will be my personal confirmation that the bottom is in and the reversal is incoming. Now, what have we been talking about on the channel? For those who are new, we're talking about the gap fill. This area right here from just about like $16.75 to about $17.40. That area is very, very attractive to me for a couple of reasons. Well, because this, even you can say arguably this like $15 area was really the start of the June 2nd rally, that breakout, and that's what caused everything. But this also goes very closely in line with the highs that we did get when the buy button was removed. So this area is absolutely some type of support that we can use, and just all in all, that gap fill at this area, I mean, let's face it, AMC loves to close the gaps. That's how it is. So I'm really thinking that again, tomorrow, we do start the bleed into this territory, confirm the earlier area of the breakout that occurred on June 2nd, and test it, get the volume spike, and then continue our higher high. Now, of course, guys, that's a good scenario to play out. If it doesn't happen, I absolutely love this area here, right about at 1460. That's when Wanda Group kept on dumping their shares to really just drive down the price between that $14 and $12 range. However, highly unlikely. I would even be surprised if we come down all the way to $16.50. But I want to prepare you all for the worst because, like I said, this absolutely sucks seeing our girl Amy down in the dumps. But what's been happening is AMC has been trading with the overall market. I mean, if we just look at the S&P 500, the S&P has been beat up the past couple of days. And so has AMC. Since 1-4, the SPY did top out at this area at 479.98 and has since really been rocky. And today kind of failed at some major supports. I mean, we did have that same rally that AMC did, but we'll actually break that down a little bit. Right now, we are going to focus on AMC. So like I said, guys, Gap fill, that's really where I'm targeting, and we are literally so freaking close. I mean, great reversal, though, today. I'll take that any day. Now, we have been talking about the Wyckoff accumulation schematic on this 1 hour chart. And like I said, per the accumulation schematic, we are expecting more downside. Where I put us in this range is going to be phase C. Phase C is that lower end of the range where you get that spring/terminal shakeout, which is just a dip below your trading range, which our trading range is right in this territory between like 21, or our lower end at least is like 21 to 25. In between that range is our lower end of the trading range. We have dipped down. We are in this range. We're waiting for that big volume spike. Now, RSI, it's been beaten. We've been in this oversold territory once over here and again over here. Looks like we are flattening out though on the RSI as of the last hour of the trading day today. But just for an example, last time we were here, we did kind of trade flat and then kind of move back down. And this type of move is what I'm expecting. One last kind of drop and dump into this range before we get that volume spike and we start our reversal higher. So I don't want to beat this chart to infinity here. So what I do want to do is actually just jump into the S&P 500 and just give you a quick look because, oh, what's going on here? Sorry about that, folks. I can't type to save my life. But I think what we really need to do is we need to compare the SPY, get a feel for how this is going to trade, what it's going to look like, and then also compare it to the AMC charts because that will give us just an even better example of how we expect day-to-day trading to look like. So one thing I am noticing on the S&P 500 is you do have this overall increase in selling pressure. That is typically a very bearish thing. Now, if we do look at technicals, we do see the MACD creeping down into negative territory, and you do have your histogram candle starting to increase to the downside. That's not good. So all in all, charts look bearish, but of course, we will look into the options flow just to give us a sense of how things are going. Really, my biggest concern is that increased red volume for the S&P 500. It doesn't look pretty. Absolutely does not look pretty. We also do have this general gap fill over here. That's going to be right around, and this is just a rough number here, 435 to 438. Of course, we did fill this recent gap flow here on today's chart. So I'm hopeful that we did find some type of support. Of course, you do have this generalized uptrend that was established. Not perfect, and I'll actually we're going to delete that and redraw it because that was a little later. So just give me a second here, folks. You can kind of see this right here. I mean, it's not the greatest support, but it is something. We did get the gap fill, but the bigger story is going to be told from the flow. So we're first going to start off with AMC because actually some exciting things from the options flow that I'm seeing personally. Well, obviously, we all know there was a lot of puts aiming for AMC to go down to that $17 range. And those who did take those positions, well, yeah, you kind of made out. And as we can see per yesterday, options flow was bloody. And that's what we expected today. It wasn't going to be a pretty day. And even in the morning, we did have a lot of bearish activity. Primarily speaking, we saw a lot of puts purchased around that $20 range. Specifically 22 for this 3/18/2022 expiration. Now, it doesn't mean we're going to bleed until 3/18/2022. No, they're just buying time because they don't want theta decay to really just kill their profitability. That's all it is. Now, additionally, after we kind of got that pullback this morning, looking into the afternoon time frame, well, what happened? Well, bullish activity was coming in. What did we see? A lot of these earlier 3/18/2022 puts that we've been seeing for just about a week and a half now, these are being sold. We also have a lot of other puts being sold, and even some calls being purchased as well. I mean, look at this call right here, $14. Oops, did not mean to do that. Sorry, folks. I was just trying to highlight it. Where was I? Here we are. Purchased a $14 call for the 7/15/2022 expiration, 1.6 milli. That's pretty freaking solid there. What else do we got? Well, we have a $25 put sold today, just into the afternoon today, $1.2 million. Some big whales coming in, guys. And just to let you all know, I do have the premium range set to $100,000 because I'm not so worried about these small traders or even the mid-sized players in the market. I want to know what the large whales and operators are doing at this point in time. But to see some of the largest plays come in, mostly bullish today, that's great. That's absolutely great. But specifically, the narrative of puts being sold is showing that, sure, there may be a little bit more downside, but a lot of these players are getting out. I mean, as we said, guys, these puts cashed in, and they made some money. And at a certain point, it becomes very risky after the AMC has dropped well over 50% at this point. So they're getting out of those plays. Are they going to hop on the other side of the train? I guess we're going to have to watch the options chain to follow along with it. Let's go into this right here. Intraday analyst with unusual whales is really great. Biggest option trades today. Of course, guys, it was slightly bearish because we did have that bearish activity in the morning. But look at this right here. Like I said before, $1.2 million put being sold here. We had a $1.6 million call being purchased today. So we are flipping around, and the larger players in the market are slowly becoming more and more bullish for AMC. And I don't want to confuse you. I don't want to say that I'm completely bullish going into tomorrow, because I do believe we are going to have a slight pullback into early trading session tomorrow, and hopefully we can get that reversal like we saw at in the afternoon today. Now, that's great. What do we have for the most active chains? Well, of course, guys, 1/21/2022, we know there is a ridiculous amount of open interest. And we actually showed this in yesterday's video, but I'll just take a quick look here. Out the money, 145s, 211,000, call it 500. 211,500 open interest on these 145s. I mean, let's be honest here. Bid and ask is almost worthless at this point. This is some really, really risky plays here. And I'm going to be honest with you. These are absolutely going to expire worthless unless we see, ridiculous price action within the rest of the week. So here's the thing, guys, with options. And honestly, this weekend I'm going to be coming out with an options video because I think a lot of people need to learn how options operate and what you should be doing to evaluate your risk. Like I said, these are ridiculous. It's a lot of open interest, but that doesn't necessarily mean it's going to happen. Now, there are some alternative open interests that were appealing here. $30, that was pretty nice. But specifically, that $20 range, that is not too bad. We have open interest of 26,000. Of course, guys, that's not going to compare to that 145 deep out the money. But $20 is fair, and we're going to cover why that actually is a pretty decent possibility. You also have the $40 strike, 62,606. What else we got? Anything else good? Nothing too crazy. Specifically, I do like that $20 strike. We'll jump into why. Let me just jump back to unusual whales. Where am I? Here we are. I have way too many tabs open right now. I gotta get better with that. But anyways, most active chains, a lot around that 1/21/2022 expiration. We did have, like I said, that $20 area, really attractive. You had open interest of, like I said, 26,000. What else do we got? This $19 range. Volume, 15,000. Open interest is still low on this chain, but bid and ask is decently attractive. We're going to have to look at the thetas. The Greeks to really get a feel for how attractive pricing is for this. Alternatively speaking, 121, the 25, the $21. We also have 18 and 23. So all in all, not bad. Not bad for the most active chains. For highest open increase, we have really that $25 range, but still not a drastic change. Really the biggest thing were those $16 puts, a lot of change in the open interest, but it still is somewhat low here. I do like the open interest of these $25 calls, but if we look by percentage increase, which is honestly one of my more favorite tools to use on this, because the highest open interest increase, I'm going to screw that up so many times, so apologies in advance for that. But with the percentage, you can really get a feel for what's going on with this a little bit better than you can see just based on the current open interest, comparatively speaking. $16 puts, yeah, you had a decent amount of change, and nothing really too crazy because your open interest for this is pretty low. But still, having a decent amount of change for these out the money calls, I'll take it, guys. SPY, because we want to know how the SPY is trading, what's happening with it, because it absolutely freaking relates to AMC. I know there is not a direct correlation between a freaking movie theater and the S&P 500. There isn't. But for whatever reason, whether it's shorts, whether it's manipulation, I'll leave it up to you guys. Whatever they want to do, they correlate it to the movements within the S&P 500. Now, S&P kind of mixed with AMC. We did see some puts being bought. Alternatively speaking, we did see puts being sold. And as we kind of talked about in the charts, we are in no man's land right now. If we look at the highest open interest increase, geez, boys, what the hell? Pretty bearish, honestly. A lot of these puts for 432, 425, and this one right here, 335. 60,000. That is very interesting. So, Max Payne. Sorry, you can't see what Max Payne is. Max Payne for this week is $22. As you know, we are well away from $22. Now, what have we seen the past couple of weeks? Well, we have seen AMC close slightly under what is Max Payne. So, what I would personally love to see, based on Max Payne, based on the options chain, based on the technical analysis. Like we said, where do all my lines go? Oh, because we're on the, brain fart kind of day, guys. So what I would like to see, let's get the freaking selling over. Let's close the gap. And honestly, for the first time ever, I'm just like, yeah, let's get it over with. AMC trade down, close the gap. Let's finish it. So what I'd like to see is tomorrow we bleed. We bleed with the major indices because the SPY isn't looking pretty. AMC isn't looking pretty. So let's bleed down. Let's close this gap. We don't necessarily have to close all of it, but let's get our final touch. And then let's start creeping up back into this $20 range, closer to Max Payne. That would be absolutely ideal. But the biggest thing is, and I'll continue to say it, we need to find support at this range. We need to hold it 100%, and we need to have volume starting to increase. We absolutely need to see higher volume than 55, 56. So if we could see like 60 million shares being traded, a bounce off of this, a decent sized green candle, that would be wonderful. Even if we get a hammer candle kind of setting us up nicely for Thursday, and then Friday, Friday, things have been freaking funky on Fridays. So we'll see. But I do believe that $20 area is absolutely going to be in play and a freaking battle come Friday. So we'll see what happens. But all in all, guys, we're okay. We're in a process here. Becoming millionaires, or changing our lives, I'll say, is not going to be an easy thing. I mean, let's face it. We're going up against some of the most corrupt players, the most corrupt market players, and the most wealthy institutions out there. We know they're going to play every single game in the book. But they can't do it forever. They have not closed their positions. And until they do, I'll be here. I'm not going. You can't get rid of me that easily. That's just how it is. Enough said. The apes aren't going anywhere. Our dips, they're bullshit. I mean, come on now. Absolutely bullshit. Let's go, guys. Let's absolutely run this. So, I think we're going to have an interesting rest of the week. Like I said, don't get worried over this bullshit that's happening. It's totally fine. It's a part of a larger plan that, let's be honest, we don't even have much control over. All right, folks. Until tomorrow, it's another day. Peace out. Tune in for the next one. You know the deal.